Hi guys, good morning. My name is Arun Juyal. I am a mutual fund distributor based in Rishikesh, and this is my YouTube channel. I really thank you for all the love and support that you guys have bestowed toward me, and it's been a tremendous journey. And people are commenting and asking for suggestions, and I thank them, and I'll request everybody to connect in my WhatsApp number. And if you have any queries or questions, do write to me. As you know that my primary focus is on the behavioral aspect of investing. So today I want to discuss about why people become confident in bull run and why it's a test of character in bear run and how a real investor should behave. First of all, you need to understand when markets are going up, then everything that you touch goes up. So you think that you have you have made it, you know how to make money in the market, but that's why people make biggest mistakes. They become overconfident, and then they uh, don't look for the asset allocation the way they should. So in bull market, everybody feels that they are genius. The portfolio is going up. People are thinking that it will go up forever. And if you look at the 1929 crash in the US, it happened because people were buying properties on mortgages, and they were remortgaging, and then they were buying again, so it created a bubble. So I'm not saying that it's a bubble in the market, but this is how people become overconfident, and then they reach a euphoric phase and the market starts falling down. And in bear run, when things are going down, everybody thinks that, oh, I got trapped, I need to sell, why I invested in the first place, and I got trapped, this is not something for me. So end of these are the two extremes of emotions that you need to avoid. So what you need to do, what is the character in investing? And the character means that you should stay focused towards your goal, and you should not think about the short term movement in the market, and you should not think that you have made it as an investor when market is going up, because it's a 15, 20, 25 years journey, and you don't have to look at your portfolio on a daily basis. You need to have long-term shifts that you need to continue, and you need to avoid the short-term noises. That is where the wealth is built. So this is the real test of character. So, and you need character to, uh, apart from character, you also need a proper asset allocation. There is no uh, what we call substitute for that. You need to have proper asset allocation, and you need to stay disciplined, and you need to collaborate with a good advisor. These things will take you far into your investment journey, and you should avoid noises at all cost. So what I discuss is that you should not have huge confidence in bull run, and you should always think about it's just like a passing phase. You need to have SIPs for good 15, 20, 25 years, and you need to stay with them. When markets are up, everybody thinks that it will go up forever, and it never happens. When markets are falling down, people think that it will fall forever, and that too never happens. Markets make movement in through crust and curves, but the idea is that market moves up in the longer run. So that is what you need to keep in mind. So you should not think that uh, bull market is a time to gamble and bear market is a time to exit. Always stay invested for as long as you can, and you need to have character in investing. What I mean by character is that you need to have a longer term horizon, a longer term view, and you need to trust the process, trust the asset allocation, and you need to trust the Indian economy at large. And finally, you need to have the right advisor to handhold you, to guide you in times of stress, and you need to do asset allocation in the start while you are making investments. So if you follow these things, then you will do wonders for yourself. It will add to your bottom line, and things will work for you, hopefully. Thank you very much. Have a great day. Cheers. Bye.